Hey, hey, hey. And the market continues up and up and up it goes. Very, very sad week for the Bears. And this is what I talked about in my last video as well is there is uptrend in the market. There is a lot of short covering happening in the market. Short-term trend is bullish. We did have a solid down day on Thursday, but the dip was bought instantly, and what a massive day on Friday with a close of almost 8 points, 7.11 point on SPY. It actually gapped up and went up, so massive close as we approach into this strong resistance. Again, 430 has been a key area. Look at this right here, 430, 430, 430. What's going to happen now? So let's look at the weekly risk ranges for what the options market is pricing in. Now, this week is very, very crucial. And the reason is because this is option expiration week and this is OPEX week. And during OPEX week, what I usually have seen is that price will fall within this weekly risk range for SPY and QQQ. So for SPY, the top of the range is 434, roughly 435, 434.69 to be exact. Sorry, 4.74 to be exact, and 416.46 on the bottom. So right now price is inching towards the upside, but it's kind of in the middle. We could see sideways action. And QQQ, again, QQQ looking much stronger than SPY. It did break out of this trend line resistance here, and it's holding its gains. That's important. Not just breaking out, but actually gapping up and holding. QQQ again in the middle of the weekly risk range. And last 2 weeks, the risk range close was above. But now, since it's OPEX week, and I have seen that during the last couple OPEX weeks, we do close within this weekly risk range. So what is the play here? So we need to take into account a lot of factors. First thing which comes into mind is selling premiums. Around Monday, like look at this. If we close around these levels, selling premium makes sense because you can sell calls. You can create iron condor within this range on SPY QQQ. Same thing with SPX, you can do that. And as long as the price is within this range, you collect all the premium. That's probably the smartest move you can make given the market is extended here. RSI is still strong. RSI is still strong on QQQ and RS, and also SPY RSI is really strong. We are getting to overbought, but that doesn't mean we'll sell off. This is a sign of strength right now in the market. Couple other things I want to talk about is what other events are happening in the market apart from option expiration week. Let's look at this economic calendar. So next week is a packed again. Like we have home builders index coming at 10 a.m. on Monday, and then Tuesday we have an important number here. Housing starts can give us insight into what's going to happen or what is happening in the housing market. And we have earnings for HD coming this week, and then again next Wednesday we have retail sales coming. We have real retail sales, and then we have FOMC minutes being released on 2 o'clock. So again, some fireworks to be expected on Wednesday. And then Thursday we have jobless claims, and Friday is pretty much nothing much. So I mean, this is a massive week with respect to headlines and macro data coming out. So we're gonna be interesting week. Gonna be I think later into the week we might see some volatility in the market. So that's what we are gonna watch for. So crucial week for the market. Let's quickly go over another thing, which what market is pricing in here. So our Fed fund rates is currently looking at this. This is the probability, right? Which this year tells the target rate, the current probability, previous day probability. So you can see here that the probability for target rates to rise to 3 to 3.25 is only 30%. Previous week it was 52%. So it's getting lower and lower. So probability says that here, this is from the futures prices calculated. So here it says that 70% chance the interest rate is gonna fall within this. But if Federal Reserve comes out and says it's gonna be more, market is pricing in less, guess what happens? Massive sell-off, massive sell-off. So that's what something we want to look into. If it's within the range, market will probably be neutral. It's pricing in that right now. Market is already priced in that. That's why it's ripping, right? So if it goes against what, like what the market is pricing in, for example, they come out and say, oh, we're gonna hike it, right? Guess what? Again, could lead to massive sell-off in the market. And couple other things to keep in mind is this is a chart I found interesting, like with respect to the market performance, and if you look here on the bottom here is the performance of Apple plus Microsoft plus Google plus Amazon and Tesla. So top 5 mega caps, top 5 sorted by the large caps, right? And you can see here there's clear divergence forming here. So this had a double bottom and SPY had a lower low and market started to rally. You could see here that you can see here market start to rally, but back in 28th of January, you can see like around January to February, we had this kind of like SPY making highs, but this started to stall here. You could see that it's not making high, and then next thing we know, sell off into these names and SPY followed. So what do we see now? Now we are seeing that clearly this is stalling here. It's not breaking out. It's stuck at this range for almost 1st August to 12th. So 12 days it's stuck here, and SPY is actually making higher highs. SPY actually ripped since then. So there are 2 ways to interpret this. First is that, well, the money might be flowing into small names, right? Like the ones which were shorted, and now people are buying those. The buying has increased, not just from mega caps, it's going into other names as well. Or there is another way to look into this is that, okay, well, looks like we might see, if these big names start to sell off, we might see sell off into SPY. So two ways to interpret this. And again, if you change this chart to QQQ, it's very similar, so you guys can do this exercise on your own. But what I wanted to show was, well, keep in mind, pay attention to this chart as well. Now let's look at another thing here, MMFI. So this is basically telling us percent of stocks above 50 moving average. And look at this. We are almost at the extreme end. This is a sign of strength. Every time we have broken through this, like roughly around 70% of stocks, we have pretty much like rallied all the way till we had like basically melt up to the upside. I mean, it's talking about 93% of the stocks back in May 2020, and this was around 88%. This was back around 88%. So this again here around 88%. So next thing I want to see is, can it inch higher to 88%? So 88% of the stocks above 50 moving average overbought range, and this is a sign of strength in the market. Let's look at put to call ratio in the market right now. This is all equities. It's sitting at 0.759, so which is still above 0.5. So it could be sold puts as well. Hard to tell from this, but we know that the fear is gone. The extreme fear, which was back in July, is gone. Can it increase? Absolutely. Let's look at VIX. Excuse me. So for VIX, we already broke below this support. 9 straight weeks of plunge on volatility is just dying here, which is good for swing trading. Market has been really good for swing traders recently, and so question is, will this keep selling off, or will we see some kind of bottom formation on this one? And the answer, in my opinion, lies in this chart here. Right here, I will show this. This is SPY intraday volatility versus OPEX. So you can see here that actually around OPEX and leading into OPEX, the volatility actually was lowest, or was low. You know, the volatility was low, and this is after, after OPEX, you see volatility has sharp increase, right? Sharp increase in volatility after OPEX. So what does that tell you? 1 week after, what does that tell you? Well, it makes sense, because why is this happening is because new option contracts are being opened, the previous are being closed, so there's a lot of hedging going on, and that can increase the volatility in the market, and that's what we'll see. I think that next week, after this week, next to next week, we'll start to see volatility maybe starts to bottom this week, and then next week might rip. So this is something I'm paying attention to closely. And so far, VIX has been going down. We could test 18, and maybe it will remain low for a while if market continues to trend up. Hard to say unless we see more data, unless we see more economic data, unless we know what the Federal Reserve is saying. So interesting week ahead. It will be sideways, in my opinion. We'll see sideways action. SPY needs to digest this move, and QQQ as well. We have been just ripping non-stop here, pretty much every day. Every other day is a massive move on SPY to the upside. Now, with respect to technical analysis, now, a couple things I want to talk about is, first of all, we haven't retested literally this level here. This is the previous breakout level. So what I would like to see is a retest of this level holding. Like, we have literally been ripping. There's no higher low being formed, for us to be confident in this rally. And we are starting to contract here, and you could interpret this in a rising wedge way, or you could interpret this in a channel, for like, a rising channel. Either way, those both are bearish. So question is, like, where do we start to see sell off? And I think, for me personally, I'm looking into this 200 moving average, which has been a crucial test for the market in previous bear markets, and I'll explain you why that is, especially comparing with 2008. And so last time we sold off here, we temporarily moved up, came back down, tested 200, dump. So can something like this happen? We go to the weekly risk range, and then we come back, we fail the test, and then dump. It's possible. What would give me confidence that market is actually up? Something like this. Retest of 200 MA and then trend up. That would cement that, okay, bear market is possibly over, and we are going for a new all-time high. All the shortest stocks, heavily shorted stocks, will start to rally more and more and more. So this week we are inching towards that 200 daily moving average. Both for QQQ is actually a little bit further ahead. It's outside the weekly risk range, and but we did see rejection on QQs as well last two times here. And let's compare this back to 2008, which a lot of folks have been comparing. So I just wanted to show you some similarities. At least I will also show you the monthly chart. So here is 2008. So now you can see here clearly that since the sell-off in the market, since it created lower low, we were basically unable to reclaim the daily 2000. We had this kind of like a bearish doji here, and then price was below 200 MA. So this is where we got to pay attention to. And then finally we made a move up here after forming the low in 2009, and then we retested this again. So a retest is important, it is crucial, and then if we hold that, then it makes sense. Last couple retests here, as you can see here, it did come back up, retest failed, and then dump, retest failed, and then dump. So we gotta pay attention to this. Let's look at monthly chart now. Another thing to pay attention is to the monthly chart. Now, some things I wanna bring out is every time we go below this 21 EMA on the monthly chart, SPY came back up. Here, COVID crash, you see this bottoming tail here, came back up, trend up, came back up, trend up. Same here again, to 2018 mini crash, came down, trend up, new highs. Similar thing here, you know, it actually didn't even, like, this one was different. Like, so it depends on how this monthly candle closes. This was a double bottom here back in 2015, 2016. And apart from that, all other scenarios here, this one again, up, except 2008 and except 2000. So you can see here again, very similar. Price unable to reclaim the 21 and 9 EMA on the monthly. So this month is crucial. Okay, I mean, we're already up, but month hasn't closed yet. We could see sell off end of this month. We have 15 days remaining and sell off. If that happens, prepare yourself, right? And it's not unwarranted, right? Fed hasn't pivoted yet. In previous cases, Fed pivoted. They said that they're not going to raise the interest rate more, except 2008. But now in high inflation environment, will they do it? They're still way off the target, right? Still way off the target. Year over year interest rate right now stands around 8.5%, and the target is 2.5%. So it's nowhere near. So there's no reason for them to pivot right now, just based on 1 month data, right? Could be a false positive reading. So I think what they'll say is that we need more data, and this could lead to sell off in the market. And SPY is also approaching this trend line resistance right here. So confluence of resistance areas here for SPY right here. You know, this is going to be a major test, 430 area. So any short position, this is the time to build your short position. If you are bearish, if you are a bear, this is basically a golden opportunity for you to enter your puts for long term. And I think this is what flow is pricing in. So let's look at flow for SPY here real quick. So yeah, so this is the SPY flow. Now notice this, I have, first of all, premium minimum 1000 bid side I have disabled here. I'm keeping ask side DT range 70 days. There's a reason for this, I'll explain. I'm looking at what these market participants are pricing in for next couple months, ideally 2 to 3 months. What's the sentiment and options flow? Now these could be a hedge, or this could be a big part in creating a large position for short. Hard to say it right now. Could be either one of them. So we need to observe the price action, and these are out of money orders only. So notice how this 404 put expiring in 21st here of October is getting a lot of volume. So let's dive deeper into this one a little bit. So volume is 32,000 contracts, almost 33,000 contracts here. And the total premium being paid is $26 million. So someone is building position on this, $26 million, specific strike too. So it looks like someone is building a position on this one. This is a big, $26 million is a big, big money, right? Not small money. And now let's change this 70 to something which is after 70 days, what the market participants are pricing in. So you can see there's some people adding leaps right now. 455 call expiring 3 years ahead, 430 call. So kind of mixed flow. There are some participants in the market which think that market will continue up, and that's why they are buying leaps on SPY, thinking that SPY will make all-time high. But then again, on the other side, we are seeing super bearish flow, someone building size. So again, market is not really flow is not really hinting towards any specific direction right now. And I mean, these are so far leaps that even if SPY, like let's say, starts to go down 1%, I mean, these guys will literally not lose much. So leaps hard to tell, you know. And let's look at QQQ now real quick. Let's look at Qs as well. Again, Qs, again, ignore the cross orders here, but look, a lot of put activity going on in the market. And these are short-term puts, 33 days, 324, 305, 300 puts. I mean, these are way out of money puts. These could be hedges, as I told earlier. Yeah, these could be hedges. And again, let's look at IWM here. Very similar. Again, these could be hedges, but looks like these are short-term. They're buying puts. Since market is extended, they're building position. Specifically, this 180 put is getting a lot of volume. 180, 192 put. Look at this, September expiration, and then this one is looks like it's again, both are September end expiration here, mid September and end of September. Look at this, 90% bearish, right? Weekly bearish, monthly bearish. Looks like it's all buy side puts here. So interesting. For IWM, I mean, I've disabled the bids, but even after that, you could see that buys on the put side is much higher than the sells. So again, very interesting to see that market participants are maybe preparing for a sell-off, and maybe they're hedging their positions since they have stocks. Hard to tell. Now QQQ has already broken this trend, but we're in the middle of the weekly risk range here. I think the best move is to sell options, you know, iron condors, or maybe short-term puts can work. Depends on the price action. Can go much higher if some of the stocks I'm watching they start to rally, especially these mega caps, right? Amazon is gapping up. Tesla, Google already broke out. I'll talk about some of these names in my next video. But overall, let's quickly go over the news, because news is actually not that great, you know. When you look at this, I mean, apart from this, Peloton cutting 800 jobs. Now you can say, well, then Peloton is not the best example, given that it's not really like a company which has been for a long time. And you know, sure, let's look at other names here. Micron is slowing hiring, right? Job cuts. Now this isn't necessarily bad for stocks, because job cuts means that they have, you know, they are not spending the money on the employees, and they're probably going to have better margins. But it is a sign of recession. It is an early sign of recession. Meta, again, same thing here. Job offers being delayed. Beyond Meat cuts about 40 jobs. So it's not just this, like Microsoft. There's so many companies, like Google slowing hiring. So there is a theme right now. There is a slowing hiring, and this could be a effect of increased hiring because of the pandemic, and now it's slowing down. A lot of people are saying it's actually bullish, because, you know, it makes sense given that they you know, like, hired a lot of people during the pandemic. And I don't know. I don't know personally. I think that this is not the best news for the economy, and we gotta have to pay more attention. So this is all I have for this week. And remember, for SPY, crucial pivot here, 431 to 430, 200 moving average. Can we break out above it? Do we see sell off after it? Yet to know that, but we are getting overbought a little bit here on SPY. Qs looks like they have more room to go, and let's see. Be very you know, risk risk management should be our top priority next week, given that we are super extended. In the next video, I'll talk about my other stocks I'm watching, and good luck, traders.